God, Poonam, this looks like a really strong report on a lot of metrics.
It definitely is. I mean, they hit it out of the park. Sales were very good across the board, across all business segments, AWS, online, advertising, even physical stores. So from a top line perspective, very, very encouraging results. In fact, AWS was probably the bright spot here. 20% gains. We haven't seen that in a while. On the margin side, I think AWS did really well, but then when it came to North America margins, they were weaker than we expected. So it's the only one area that I saw some skepticism. And I think that's largely due to their ability to want to maintain low prices to make sure the consumer keeps coming back and investing in its fulfillment.
So you think that margins took a hit because Amazon is keeping prices low. Why?
I mean, they want to drive market share gains, right? So if you think about what's happening in retail this year, tariffs have clearly added to costs, and many retailers have decided to offset those costs through efficiencies to try to keep and hold prices steady or raise them selectively. So that could be part of the pressure. And then also, Amazon has stepped up its game on shipping, where it was the leader and it still is the leader, but they're continuing to invest there to get items to you faster, same day, et cetera.
Yeah, they still do it, right? They're definitely completing on that one. Hey, Ed Ludlow, come on into our conversation, co-host of Bloomberg, of B-Tech on Bloomberg Television, watching these numbers. I mean, investors are sending shares of Amazon much higher here in the aftermarket, stock up about 9%.
Everything in the sense that the cloud computing division accounts for the majority of operating income, right? And this return to growth year on year of above 20% for the first time since 2022, it's absolutely timely. I think Google gave us a lot of evidence that GCP, their cloud offering, has a lot of momentum at the moment. But this is a bit of a barnstormer from Amazon to say, actually, on every metric that we track, AWS is doing really well. One of the headlines that you spotted, really excellent, the appreciation in their investment on Anthropic, that had a non-operating income impact to the bottom line, right? But also they're talking a pretty fierce game about their custom training chip, Trainium 2, and calling it a multi-billion-dollar business. And what we've seen in the past is when Amazon hasn't necessarily put a specific dollar figure on something, but said, this AI thing is in the billions of dollars, the market has given them a lot of credit for giving us at least like a little bit more detail there.
Ed, where does the Trainium 2 model fit in?
Well, this is why I bring Google up. When we broke the story that Anthropic had done a deal with Google for use of 1 million TPUs, Google's custom AI card or accelerator, it was a bit of a black eye for Amazon, because Amazon is also a major investor in Anthropic, and Amazon and Anthropic have this large project called Project Rainier, a data center in Indiana. What they're saying is that this is a multi-billion-dollar run rate business, offering their in-house chip to third-party customers. We don't know any more than that, but it does indicate that both for Anthropic and for other customers outside of Anthropic, that it's a viable business. They've invested a lot of money on custom silicon, and at least on the one headline we have on that, it's paying dividends, so to speak.
Hey, speaking of dividends and paying dividends, and Poonam, I want to go back to you on the retail side of this. I mean, we know that Andy Jassy, the CEO of Amazon, has really been working on improving profitability of that business. Automation, we've had their key head of robotics
Ty Brady
talking about what Amazon continues to do at that company in terms of automation and robotics. So what else can you give us in terms of color on the retail side of the business, which is something that so many of us, right, identify very clearly with when it comes to Amazon?
Yeah, I think, look, they're making all the right investments to improve profitability in the longer term. Amazon's retail business is finally break even to profitable. It took a long time to get here. And I think automation will be the next leg of growth to drive that further. But as I mentioned, earlier, AWS is driving their EBIT margins. So AWS can compensate these investments to a certain extent, and so can advertising, because the margins here are just so much higher than they'll ever be able to get in the retail business.
Ooh, how is the advertising business doing, Poonam?
It's doing really well. It grew 22% in constant currency in the quarter, so right where we expected. And I think, that's a high profit business. It's about 75 to 80% profit margins by our estimates. And that's flowing right to the bottom line. We see it going to $100 billion. So there's a lot of improvement that they can build in advertising and really drive that business higher from here.
Where's that coming from? Is that coming from interstitials placed in Amazon Prime Video, which I think, caught a lot of people off guard when they started doing that? Was it last year, maybe? Or
yeah, no.
Yeah, or is it coming from like products that are paid for placement?
I think it's a combination of both. You're absolutely right. These ads are driving incremental revenue, but if you think about the base of this revenue base, it's still coming from product advertisements. The ads do help, and they will become a larger driver as the ad business grows in size, but the core of it is still product advertisement.
Hey, Poonam, before we let you go, what's kind of top of mind for you in the areas that you cover with Amazon that you would be asking on the earnings call?
On the retail side, it's really about holiday and how that's going, their October Prime Day deals that they had, how that's going, and how the customer is responding. We think the customer is still holding up well. Are they seeing the same thing? And how do they see holiday shaping out to be? We're entering holiday.
All right. Love it. Love it. Looking out for Poonam's research, too, that will hit the Bloomberg. Poonam Goyal is Bloomberg Intelligence Senior Analyst for E-commerce and Athleisure. We want to go back to the co-host of B-Tech on Bloomberg TV every day, 11 a.m. to noon on Bloomberg Television. Ed Ludlow still with us. Ed, as you continue to pour over that release, what else is catching your attention?
Yeah, I mean, Poonam gave us the story with Amazon.com, right? Most of the audience are going to be more familiar with the e-commerce business than they are with the cloud computing business. They are number one in cloud computing. And as Poonam put it so succinctly, the profit is compensated for the less profitable e-commerce side through cloud. But Andy Jassy's really focused on retail being more profitable. Tim is absolutely right that you look at advertising and the role that that's played there, and it has been improved. I would also just note that in the quarter, Amazon's numbers reflect almost $2 billion in severance costs. That's the other story of Amazon now,
Ed,
getting rid of the bloat.
That was the previous quarter, right? Not the current quarter?
Previous quarter,
exactly.
Right?
So is the current quarter going to take a hit right now, or is it going to be the upcoming quarter? It's always tough with this stuff because we don't know how these employment agreements work.
Yeah, but the third quarter operating income was $21.7 billion, almost $22 billion without charges when you strip the charges out. And so, this is a profitable business overall because of cloud. It's a funny thing to say, but what's a couple of billion, to right-size the company? And that is the thing here. Amazon has been inconsistent on this point. At one time, Andy Jassy said that right-sizing the company and eliminating roles was because of the advent of AI. But the communication this past week when they cut 14,000 corporate roles was more about bloat and middle management, right-sizing areas and simplifying the management structure more than anything. So it's hard to know which of those two stories is the predominant or prevailing one here. But yeah, for Amazon, it's a one-time charge that, so what?